Welcome to part two. In part two for my ARC and PLC sign-up recommendations for Wisconsin farmers in 2022, I'm going to focus on SCO and ECO for corn, soybeans, and wheat. These are relatively new crop insurance products available just recently in the last couple of years. And I think with the sign-up recommendations showing the prices, I should say, expectations for 2022, ARC and PLC, neither one is likely to pay very much. So I think it's a year to, if you're thinking about it, SCO might be an option for some farmers. In that case, you need to sign up for PLC. So I'm going to spend a few minutes how these policies work. SCO allows you to insure part of your revenue protection deductible with the county policy, the area revenue protection. What you're doing is you're taking your individual coverage and layering a county level coverage on top of it. You still max out at 86% of your total expected revenue. So for example, if you have a 75% coverage level for your revenue protection policy, you can do two options. If you want to get 85%, you could spend the money for a higher revenue protection policy, or you could buy SCO. SCO would take the county yield, and if the county yield falls below your 86% coverage level, then you would trigger county payments for your individual operation. The county policy, ARP, uses exactly the same pricing as the revenue protection policy, but instead of your unit yields, in your unit yield history, it uses a county yield history to figure out payments and then actual county yields. So that's what it's talking about. It layers county coverage with individual coverage. What you would do is add SCO to your revenue protection policy and increase your coverage up to 86%. You won't pay until that county loss exceeds 14%. So you're going to have a 14% county yield loss, or I should say county revenue loss. And like the regular crop insurance policies, it's subsidized, the premium is. And so the farmer pays about a third of the premium. The premium subsidy picks up the other 2/3. But in order to buy this SCO, you have to enroll in PLC, not in ARC. So we'll spend a little more time here as a graphic to kind of explain it with the coverage, how you've got your deductible there above your individual coverage, and SCO covers a part of that deductible. So for example, if you have that 75% coverage, the first 25% of your revenue below your guarantee, that's your deductible. SCO lets you cover part of that with that county policy. The key there is not your yields, it's the county yields. And so there is some, you want to call it basis risk, what goes on at the county versus what goes on at your farm. But you can see it kind of adds more of that coverage there. So I like to lay out these four possible outcomes that can happen with this layering of the two policies and kind of indicate that basis risk. SCO can pay, but not revenue protection. You can have a low county yield, but you did all right. Maybe there was a dry year, but you happen to have some heavier, wetter soils and your yields were fine. You don't trigger an RP payment, but the county yields are low and there's an SCO payment. Maybe revenue protection will pay because you have a problem, but SCO doesn't pay. The county yields are good, but your personal yields are low. You have a problem. Maybe there's a hailstorm to get you, or you have a thin, drier soils, and the county is fine, but not your farm. Option three, or outcome three, is both of them pay. It's a bad year for everybody. The county yield is low, triggers payments from SCO, and your yields are low and trigger an RP payment. And the other option is everybody does fine, yours and the county are high, and neither of you get paid. So we kind of go through this option here. It's a little simple example. Assume you bought that 75% revenue protection, you have that 25% deductible, you add on that 86% SCO, that's the maximum you can buy. Let's say county yield is 80% of, or county revenue is 80% of its average, and your revenue is 65% of your guarantee. That's outcome three. It's a bad year for everybody. You receive a 6%, an indemnity for a 6% loss at the county level from your SCO policy, and receive a indemnity from your revenue protection policy for a 10% loss. It's a bad year, and this is how you can use these policies work together in that case. That of course, is the outcome where both pay. You saw the other options are also a possibility. Now, on top of this, there's a new policy that came out in 2021 and is available again in 2022 called the Enhanced Coverage Option, or ECO. What this does, it sits on top of SCO. So you can go from 86% up to 95% of that expected revenue, again, using that county policy. And so it sits on top of the SCO, or you can actually, you get it without the SCO. You can just have revenue protection, then ECO. And the key about ECO, enhanced coverage option, is you, regardless of whether you sign up for ARC or PLC, it doesn't matter, you can still buy it. So even if you choose ARC for your county ARC, you can still buy ECO for your crop insurance. The key, though, is ECO is going to be more expensive than SCO for two reasons. One, you're going up to pretty high coverage level, that 86% up to 95%. So you're going to pay more for that higher coverage. And then also it has a smaller premium subsidy. So the government is picking up a smaller portion of the premium. So the farmer, the landowner, has to pay more of that premium. So you'll have to price it out yourself. But it is a way to lock in a large part, up to 95% of your expected revenue. Whatever part you buy in revenue protection, then these SCO and or ECO for the stuff above your where your revenue protection policy leaves off up until 95%, layering that individual coverage with that county level coverage. Here's a little data to show that farmers have been experimenting with this. SCO was available in 2020 and in 2021, and ECO was available last year in 2021. The first column there, well, the first rows are for corn, soybeans, and wheat, the policies that are available, 2020 the top, and 2021 the bottom. First ones are for SCO, and then the final column, two columns on the right are for ECO. You can see the number of policies, over 800 policies, 800 farmers in Wisconsin bought SCO in 2020, 848 in 2021, 300 soybean farmers, up to almost 500 here for soybean in 2021. And then you can see the number of acres, quite a bit of acres in corn. Between 5 and 10% of corn and soybean acres were insured with these ECO and SCO policies. 268,000 for corn, 77,000 for soybean in 2020, down a little bit acreage for corn and up quite a bit on soybean there in 2021. And then wheat came in much stronger with 68 policies and almost 7,000 acres. If you notice also ECO, we don't know if they're layered ECO on top of SCO, but those 718 to 467 policies look like they could have been. You bought the SCO and you layered the ECO on top of SCO, and you can see quite a few farmers, well over 200,000 acres of corn and over 100,000 acres of soybeans bought these policies for the 2021 year. In terms of outcomes, nobody received an indemnity for SCO in 2020. The prices and yields were just too high. We're still waiting on 2021. It's a county policy. We've had some counties that had some low yields, particularly in the southeastern part of the state, that might have had some drought problems. So there might be some ECO, SCO policies paid. We just don't know yet. We're still waiting for the county yields to come out in March, and the prices have to be determined for corn and soy.